Resource Watch is brought to you in association with Tebe Investment Corporation.
Hello and welcome to Resource Watch, where we look at what's making news in the resource sector. Today we talk about diamonds and all that glitters. I'm Kukulethu Mfupi in for Nozipho Mbanjwa. Let's kick off with a quick look at the stories making headlines in the resources sector.
Angolan state oil company Sonangol is set to launch a bidding round for licenses to explore 12 new offshore oil blocks in 2015. Angola wants to increase oil production to 2 million barrels per day. Two top South African gold miners, AngloGold and Gold Fields, have quit the World Gold Council, citing costs. Members of the WCG pay per ounce of metal produced. AngloGold and Gold Fields have been slashing costs in the past year, trying to offset the falling gold price. And analysts say the end of South Africa's longest mining strike may do more to lift the prices of platinum and palladium than the strike itself. The strike boosted platinum prices to 8-month highs and palladium to its highest in more than 13 years. BOFA Merrill Lynch says with the strike's end, the cap on rallies has been removed.
Well, now in our Digging Deep segment, we aim to unpack latest developments within a particular resource sector. Today I'm joined by James Campbell. He's the CEO of mid-tier diamond miner Rockwell Diamonds Incorporated. Warm welcome to Resource Watch, James. Good to have you with us today. Perhaps if we start off on the general trends that you're seeing when it comes to the diamond industry from a global perspective, what are the key highlights?
I think there may be three things I'd like to focus on there first. The first is the diminishing global supply of rough diamonds. We're seeing that many of the older, larger mines are becoming more expensive to mine and are gradually being depleted. And we're not seeing very much in the way of new diamond exploration money going into the business, which means there are very few new discoveries taking place. From a demand perspective, obviously from a consumer side of things, we're seeing the growth of the middle class in China, in India, and the American economy has been much stronger than what people thought it would be. And of course, many of these people, as a rite of passage, would like to have a diamond, whether it be for an engagement ring, a marriage ring, or a specific anniversary. And on the back of those two things, my third point is you're beginning to see new money, particularly this year, and we haven't seen it for 5 or 6 years, now coming into the diamond industry to fund the development of new mines, and almost a hint that there could be new money coming into diamond exploration as well.
Does that mean that the opportunities presented are on the favourable side?
Yes, they are. You know, this time it's taken a long time to come to this particular point in time, but many people are dusting off old projects to see if they'll make money in terms of current economics. And many people are looking for new opportunities, chiefly actually in Africa, which is very exciting.
But obviously there are risks and rewards presented with that, because with exploration, you're not always guaranteed to find something underground.
Well, in fact, that's the very point why many people haven't actually put money into diamond exploration for a few years now. It's that proverbial needle in a haystack, in that you can do extraordinarily well if you find an economic diamond deposit, but equally, and more than likely, you're likely to lose a considerable amount of money. And in fact, probably the only recent strong success story coming out of Africa was African Diamonds, which launched at about 5p on the AIM market in London and eventually sold out to Lucara Diamond Corporation for a little bit over 50p 4 or so years later.
When you mention the African growth story, it's interesting that you mentioned that there are a lot of opportunities presented on the continent. Are we finding that investors are capitalizing on them and African states are encouraging and operating in business-friendly environments?
That's a very, very complicated question. We're seeing quite a bit of new money coming into the London AIM market to look at Africa in particular. And we find that the London market understands Africa in terms of funding, because very rarely do you get funding from actually Africa itself. You're seeing new exploration taking place in West Africa, Central Africa, and to a very limited extent in South Africa. Many of these states have got high-quality geological surveys, so you can go to them, you can access a full data pack of the geological environment, the tenement status, and things such as that. And that helps investors come in and start work in those countries.
And that money, where's it coming from?
It's chiefly coming from London, And what we're seeing now as well, as opposed to typically institutional money or financial institutional money, we're seeing more and more private investors actually coming into this space because they see an opportunity for market consolidation. There are a number of smaller diamond companies out there, and there are a number of smaller diamond companies which have single assets out there. So people at the financial market is seeing, here's an opportunity for consolidation and basically making a large amount of money.
Consolidation for a small player like yourself, does that concern you as a potential buyout for another company?
I see it more as an opportunity rather than a concern. And Rockwell is very unusual in a way that, yes, we are very small by global standards. However, we are one of literally a handful of global diamond producers, and we employ just under 1,000 people in our 4 mining operations. So although we're very, very small, we are a producer, we employ a number of people, and yes, we consider it a risk, but we also see it as an opportunity in that we have a strong board, a strong management team, and we feel those two together could take on more than we're actually doing at the moment. So we try and flip things actually on their head more than anything else.
It's interesting when you touched on the investments that's coming onto the continent that sub-Saharan Africa didn't feature too strongly with regard to that. How come? One would think that Namibia and Botswana and even South Africa still present a strong side of opportunities.
I think if I start with Namibia, Namibia is very, very famous for its alluvial diamond deposits and its offshore mining. And that's chiefly controlled and being mined by Namdeb, which is a joint venture between De Beers and the government of Namibia. There's not that much opportunity for kimberlite exploration or primary diamond exploration.
What does kimberlite exploration mean?
Okay, kimberlites are essentially fossilized or extinct volcanoes, which erupted many, many millions of years ago, some as much as 1.5 billion years ago. Kimberlite magma comes from much, much deeper in the crust, where diamond exists, where carbon actually exists as diamond. And we haven't seen any kimberlite explosions or volcanoes in our lifetime, but they happened in prehistory. So what we're looking for are these extinct volcanic plugs, which are called kimberlite, named after Kimberley in South Africa, where the first and type locality for kimberlite was actually found well over 100 years ago.
Maybe you can educate us further, because you've also been kind enough to bring us samples here today. I understand they're not real diamonds, otherwise one might have sneaked out in my back pocket. Yeah. But perhaps if you walk us through the samples, where were these discovered, and are they the largest diamonds that you've actually managed to dig out?
These diamonds were discovered on our Saxondrift mine in the Middle Orange River of South Africa, which is about 150 kilometers northwest of Kimberley. And these come from very, very old paleo gravels. If you go and look at the Orange River today, you'll find it's maybe 100 meters across, and it's a gentle, winding river going from Lesotho and coming out of Doronymunt on the border of Namibia and South Africa. However, it wasn't always like that. And in prehistory, that was a raging torrent, very similar to what the Congo River is today. And so where these diamonds actually came from is they chiefly came from the mountains of Lesotho. We have companies such as Gem Diamonds mining the Letseng diamond mine there. You have other companies such as Firestone Diamonds, Lucara Diamonds and others exploring and developing projects there. So the origin of many of our diamonds in the Middle Orange River actually comes from Lesotho and came down on that raging torrent of the Orange River when we were in a much more subtropical climate, South Africa was, than it actually is there today.
Well, it's interesting the discoveries that Rockwell has been able to make in the past, but what about the future prospects going forward? Are you looking to make more acquisitions? What's your strategy going forward?
Our key strategy is to focus on the Middle Orange River. And we started with one mine there, mining about 250,000 tonnes a month. And we're now heading towards 750,000 tonnes a month with an interim target of 1 million tonnes a month. And it's not production for the sake of production. And our scientists have been able to evaluate that for every 1 million tonnes of gravel processed, you'll recover a 100-carat stone.
That's a phenomenal.
So in order for us to achieve quarterly earnings stability, we need to be processing in the order of 3 million tonnes a quarter.
James, thank you so much for joining us today. Always a pleasure speaking to you. That was James Campbell. He's the CEO of mid-tier diamond miner Rockwell Diamonds Incorporated. Staying with with all things sparkly, we visited Cape Town's Szymanski Diamond Experience. They're manufacturers of fine jewelry. Our gem of the week is platinum, and they show the special skill needed to use the precious metal in jewelry making.
Platinum is one of the most rarest elements in the Earth's crust, and because of its scarcity, a limited amount gets produced every year. This valuable commodity is the least reactive metal with a high resistance to heat and corrosion. We spoke to one of the country's leading jewelers to find out more about the complex manufacturing process of this precious metal.
So we buy the platinum in its pure form, which is 100%. We alloy it down to 95.2% pure platinum to make it more malleable and jewelry applicable for the different application. So we alloy the metal in-house, and we're using various technology. We're using laser technology for welding, for engraving. We're using different set of tools, different gas flame, different temperature. And once you need to understand the metal and how to work with it. And once you do, I think it's a very nice metal to work with, because for jewelry and diamond and gemstones, it is the best metal and the preferred metal to use.
Due to its high cost, platinum manufacturing remains an elitist sector, and unless industry knowledge and high-tech equipment are made more accessible, smaller jewelers will remain sidelined in this high-end market.
For South Africa in general, because we have 80% of the reserve of platinum in the world, I think ones need to look at investing in the right technology and the right skill in order to create more local production that can export from here, and also create more artisan working in it. And one of the ways to create technology hub and service hub to allow people to use those services, because for the smaller companies, it's very difficult to invest a lot of money in technology. But if you do have the hub, it can basically service a lot of people around it. And I think that's a very effective way to grow the platinum production locally.
From deep underground to gracing a well-manicured finger, platinum undergoes quite the journey. And for those who can afford it, that old line, "All that glitters is not gold," takes on a whole new meaning.
That's how we end this week's show. Talk to us on Twitter @Kukumfupi and use our hashtag #ResourceWatch. Until next time, it's goodbye for now.